Good morning, folks, and welcome back to Almus Market Mornings. The lack of data from the US due to the government shutdown seems to have been put in the back burner as investors focus on the US China trade war. President Trump on Friday posted about increasing tariffs on China and said there was no reason to meet the Chinese president anymore due to Chinese export curbs on rare earth materials. So, the heart of the issue seems to be the Chinese notification, which requires overseas exporters of items that use even a bit of rare earth to obtain an export license. President Trump followed by imposing a 100% tariff on China, bringing the import taxes on many goods to 130% starting 1st of November. Morning, JK. What's your thought on this escalating trade war? Things seem to go out of hand, and President Trump has tried to pacify markets as well. But what do you make out of the overall situation?
Good morning. So definitely it reignited the trade war, uh, risks for the global economy. But I think the damage was done in a very short period of time. The notification from China had come on Thursday, and the US reacted a bit late. That too, almost at the fag end of the week, and market was continuing its exuberant rally in the markets in the US, and I think Trump's tweets on those tariffs at 100% came as a shock, and that was big reaction that came about after that. Yes, over the weekend there has been quite a few pacifying statements, one from China side also. So they say that these restrictions on the rare earths are vital and more, not towards the consumer, but then towards the military products. The end usage is what they are concerned about. At the same time, as I said, Trump also tried to repair the damage by saying that the relationship will be fine. So markets have taken these statements a bit positively, and that's why we are seeing a bit of a recovery in the markets as well. But on the broader picture, okay, in the meantime, even Vice President Vance said that Trump hopes the US does not need to use leverage on China, and they would appreciate the friendship that Trump developed with China's premier. So more statements also. Yeah, but in the broader picture, both US and China, at least for now, cannot survive without depending on each other. Of course, there will be bouts of trying to dominate the other, and I mean for the time being, at least these interdependence will continue. Therefore, we cannot have a complete shut off or extreme of tariffs and other restrictions. So they will have to coexist until they find the ways to be self-dependent. China depends a lot on U.S. Market for its exports and also for the technological innovations. While U.S. depends upon imports from China of many, not only for consumer goods but also for several critical materials. I think these things cannot go away in a hurry. Therefore, not seeing it as a final stamp of bearishness on the markets. I think this will get somewhat eased out in the coming sessions. That's what we have already seen in the markets. As far as the US market is concerned, it now is entering a second week of shutdown in a couple of days, almost 2 weeks now, and there is no sign that it is getting ended. So markets, that was another reason why markets suddenly realized not only is the trade war intensifying, but also the US shutdown, which where Trump has indicated there can be a lot of layoffs because of that. Permanent layoffs also can happen, and these are likely to worsen the situation as far as the US economy is concerned. So though these two factors together, and then there was an additional factor in Japan, the ruling leading Democratic Party, which was surveying with a coalition, saw that the coalition broke out broke down rather, and so there was a good chance that Takaichi, who was tipped to be the PM, was it was nullified, and therefore there has been a reversal of Takachi trades. Buying dollars or buying high yielding assets against the yen as a fresh carry trade, and then even Japanese Nikkei, which had soared, almost 6% after that, and Japanese yen, which had weakened to almost 153 and a half. They all reversed after those developments, and this is also so that was a uh, risk on factor for the market, which also got reversed. And the French political situation continues to be fluid. Although Macron has requested the outgoing PM to once again try and form a government and get in a consensus for the budget passage. So there's a lot of challenges for the global economy apart from just the tariffs, and that is why markets have suddenly seen that the exuberance is perhaps a bit overdone, and a bit of caution is infused into the market. Despite the correction that we may have for the Friday's moves in the US market, we may still not be reaching the highs very soon because of the challenge that I mentioned. Yes, in the absence of official data from the US, we had the Michigan Consumer Survey, which continues to be, kind of painting a dire picture, not though slightly down, or rather slightly improved, but it is not, really giving any sense of reversal in the consumer sentiment to the positive side. Inflation expectations 1 year ahead also slightly dipped, but it is still in the higher level. And for forward inflation outlook is also on the higher side. So that's not giving comfort. And also there is a news that uh, the government department will actually release the CPI data on 24th of this month. Notwithstanding the shutdown that we have seen, this may be because this is a key data that is necessary for the policymakers, particularly the Fed, which will be meeting end of this month. So that's one development that market will be watching out for. So overall, I think we are in slightly a fluid situation. How things will move on, uh, all with regard to the tariffs, with regard to the Japanese situation as well as the French situation. The dollar is kind of not found any major trend. The only thing that we could see was that EM currencies, which had gained substantially after the Japanese LDP had chosen Takaichi as a possible candidate for PM. That is when fresh carry trades were initiated, but all those EM currencies reversed in a big time on Friday. And the Dow, S&P, and Nasdaq all had erased the entire gains of the previous 4 days and ended quite negative for the week, falling almost 2.5% for the week. On the dollar, once again, there's been a mixed performance. One feature of the dollar of late is that, unlike in the what we have been used to for several years now, a dollar is bought when there is a risk-on situation. When there is a risk of, dollar is actually sold, particularly against the major currencies like yen and euro. So now dollar is a risk currency. Dollar is not a safe haven. That's the slow picture that is emerging as far as the dollar is concerned. It's not showing, dollar is not losing its shine entirely, but as long as U.S. economy does well, U.S. markets do well, dollar seems to be in demand from investors. But so the moment there is a challenge, then the dollar gets sold off, particularly against the major currencies. Of course, EM currencies will be a slightly different behavior that we can see. As for the rupee is concerned, yes, there was some life in the rupee on Friday. As we suddenly saw a dip to 88.50 on the back of some flows, which the PSU banks did not absorb at higher levels, but they did come back at 88.50 and push it up a bit. And then after the events in the US where we had the stock markets coming off, then the dollar rupee also recovered to above 88.70. But important thing to note is that it's finding it easier to come off rather than to go up. mainly due to the RBI intervention that we have seen. Market in India will be focusing on two things this week. One is the CPI number, which will be coming out today. Again, it's likely to come below 2%, helped by weaker food prices. And in fact, that is actually offsetting the unfavorable base effect of last year. And the second data that I would be looking at is the trade number that will be out on Thursday, and that is expected to probably show a further negative, or rather deficit to increase further, and how much impact it shows due to the the worsening, or rather the export underperformance after US imposed 50% tariff on India. That's one thing. And there is also a report of massive import of gold and silver in India. So deficit number will be one to look forward to as far as Indian rupee is concerned. I think until we get these clearer picture and the global picture also settles down, or at least shows some signs of stability, I don't think rupee can make too much of gains. But of course, upside is also getting capped because of the RBI's constant intervention. Yes, I think rupee overall dollar seems to be in a kind of mixed situation. If the situation on the tariff, etc., eases, I think based on the political impasse that we are seeing in the US, in Europe rather, and France particularly, we will see the euro resume its correction further towards 1.15, and Japanese yen is definitely a bit of directionless, I think, until the leadership issue and the coalition formation of the government is also resolved. Until then, we see a range trading for the dollar yen. Rupee 88.50 and 88.80 should cover it. Thank you.
Thank you, JK. So I think the three, four things we need to keep in mind. One is how the Japanese situation evolved after the ruling coalition broke down. There's a good chance because of this Takaichi becoming prime minister the chances of Takaichi becoming prime minister has reduced. So the infamous Takaichi trades are being reversed. EM currencies, which had gained post this news, had also sort of reversed. The next thing is, of course, what's happening in Europe and the French politics. That's something to keep an eye out on. Lastly, the US shutdown, as well as the China-US trade tariffs. All these sort of developing situations, which will need constant focus as an investor. For rupee, we saw a dip towards 88.50, but it quickly weakened past towards 88.70. Markets in India will focus on CPI today. Likely a print below 2% due to the food prices, and how that plays out for the RBI. That's something we will need to keep in mind, as well as the trade numbers on Thursday, because there is a likelihood of the deficit increasing due to the higher US tariffs and higher imports of gold. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh round of updates.